Right. I want to talk about another ETF that I have in my portfolio. Actually, there's a couple here that I'm going to talk about, but I'm going to focus on one of them because I'm sharing the results on my YouTube channel with everybody. So we'll focus on that one. This one is QDTE, and it's put out by Roundhill. And if I drag down here, see QDTE right here. So we'll click on that. QDTE Innovation 0 DTE Covered Call Strategy ETF. Innovation 100, basically the NASDAQ 100. 0 means 0 days to expiration. Covered call. I'll get to that in a few seconds. So QDTE says it's the first ETF to utilize 0 days to expiration options on the Innovation 100 index. It also says seek to provide overnight exposure to the Innovation 100 index to generate income each morning by selling out of the call 0 day to expiration calls on the index, and it's actively managed. The first thing everybody wants to know is how much does it pay? So over here, it says that it pays 104% a year. And don't get too excited. At the end of 2024, it appeared that they had to distribute higher than normal distributions, probably for tax reasons. So they paid out a couple very high dividends. If you calculate those for a year, it would come out to be 101%, but that's not typical. Let's go ahead and see what it typically pays. I'm at the site called totalreturns.com, and compared to SPY, the S&P 500, and QQQ, here's the QDTE. I've also included XDTE, another ETF by Brownhill that I hold in other accounts. The reason why I included XDTE is because it's been around longer. It gives me confidence knowing that Roundhill kind of has this figured out. But even though QDTE has only been around since last March, XDTE has been around a little bit longer. Since the first of the year, in 1 month, here you can see the S&P is up like 3.5%, but XDTE, which is based on the S&P, is approximately the same. If you look at QDTE, it's up 4% since the beginning of the year, and QQQ is up 3.41%. These cover calls are outperforming the indexes that it's emulating. And if we come down here, so since March, they have returned S&P 17.5, QQQ 17.5, and XDTE 18.5. Once again, you can see that it's outperformed the S&P and the QQQ. So that's encouraging. Let's go back here for a second. One thing that's different about these Roundhill funds than some of the other funds I have is that they pay out a weekly distribution. What's nice about having it weekly is that I feel like you're getting more of a compound effect. When they pay out weekly, I can turn around and buy more shares that same day. And then the following week, when it's paying out another distribution, I'm also getting paid out on the shares that I just bought the week before. So it's compounding weekly instead of compounding monthly. One thing we always try to look at is the expense ratio, which is almost 1%. Some people will say that's way too high. However, if an ETF is getting you 30% a year, I don't really mind paying 1% if I'm getting back 30%. That's high, but I can live with it. Now here's the confusing part is what does it hold? So typically these cover call ETFs, they will own a stock or an ETF, and then they sell covered calls on these stocks or ETFs that they own. These ones are a little bit different. If you see what it's holding, it says NDX. There's a date here, 6/20/25, September 19th, 2025, December 2025. These are long positions in options, like almost a year away from now, or 6 months to a year. So the way these work, they go long in a position out in the future on this index. And then they'll sell covered calls that expire daily against those other positions to generate income. It's confusing enough that I don't try that on my own. You'd have to be on top of things, and it's not tax efficient. So eventually you pay taxes on anything that's a profit, but it can get really messy. Roundhill seems to have figured it out, in my opinion. There's dozens of covered call ETFs out there. I've looked at a lot of them. I have a lot of them, and I sometimes put a little bit of money, a few $100s in one, and then watch it and see how it performs. By putting a little bit of money into it, I'm more motivated to check it every week, every month, see how they're doing it, see how it works, see how it's performing. I like to see how it performs when the market goes down, how it does when the market goes up, performs when the market goes sideways, to get an idea what's working and what's not. Based on that, I might put more money into it if I feel confident that it's working. So Roundhill with XDTE and QDTE, my personal opinion, this is only my opinion, I think they got it figured out. If you want to know more how synthetic covered calls work, which what this is called, there's a lot of YouTube videos that explain it. But unless you understand options to begin with, you won't probably understand exactly what they're doing. Not saying you can't learn understand what they're doing, because you certainly can. I would start by learning what a covered call is and maybe a cash secured put. And then once you got that figured out, then start figuring out like what a synthetic covered call is. One thing I'm always checking is return of capital. How is this being taxed when I get my 1099 forms at the end of the year? What's it going to say? I've already downloaded a couple of these to look at. If I click on this one, what they do, they combine multiple funds in one sheet. This top one here is the S&P 500 one. I want to look at the Roundhill Innovation-100, which is this one. And this is from November. And if you look, it says return of capital, 26 cents. So these pay weekly. It looks like they pay less, but they're paying every week. So they're paying $1 a month approximately. So that's from November. Let's click on another one. You got to look at each month to see what they're doing. Same thing here. This is January of 2025. They are paying return of capital, which is what I want. Now, this one here is different. This is December. I mentioned that they paid out pretty good size distributions at the end of 2024, like 80 cents per share. And that's where they came up with that 100% return per year. If you look at this one here, is not return of capital. This is actually investment income. So this is something I don't want quite yet. I don't want to be paying taxes on this at this point in my life. So another thing that everybody's worried about is NAV erosion. NAV erosion is where the net asset value, the fund might start out $40 a share, and then as it pays off these weekly dividends, the price per share kind of starts creeping down, goes to like 39.80, then goes to 39.60, goes to 39 and 37, and pretty soon they goes down to zero. So these have been going sideways pretty much, a little bit down. Once again, the net asset value, the distribution schedule will be down here somewhere. The next distribution is the pay date is the 31st. I go down here a little bit further. Let's show more. So it typically pays around between, looks like 24 and 30. I mentioned these two big ones, 80, 86 cents. Those aren't normal. You look back, everything previous to that has been in the 20s. Sometimes it hits 30. What it pays out is what it's making per week. So if it sells those covered calls, it has a good week. There's a week or two trailing. What's happening like this week will be paid out in like 2 weeks. There's a couple YouTube channels that has a pretty good handle on tracking that. They keep track of their daily trading of Roundhill. They guess within a couple of cents of what the distributions are going to be a couple weeks before they're announced. I like keeping an eye on those. You can see it's pretty consistent. There's been some times when it's paid out really high for several weeks in a row. That's because the volatility was there. The more volatility there is, the higher the premiums are on the covered calls. And here's where you can download those documents. The tax information is where I got those 19A-1 forms from. And you can look at the questions and answers. Roundhill has several other ETFs. I'm not interested in most of them. They do have a new one that is another weekly payer that has come out. I believe it's YBTC, and I'm not ready to jump in that one quite yet. Okay, so that wraps up why I'm investing in QDTE, why it works for me, but it might not work for you. If you find these interesting, I'd appreciate it if you would subscribe to the channel, give it a thumbs up. Thanks for watching.